Another rough day going into the weekend and a little bit of nervousness in the markets. So, what's your plan and what are you going to do going forward? Stick around for the video, there should be some great information in it.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Friday. I hope you're all doing well. I hope you're not getting beat up too badly in the markets. And let me tell you straight off the bat, it has me a little bit of concern that there could be a lot of follow through going forward. At the same time, next week is a big week with that April 2nd deadline on the tariffs. We also have jobless claims and some other data coming out. So it could be the bottom next week, too. So, what are you supposed to do in these volatile markets in terms of your investments and what your goals are? Now, as always, before I even go any further, this is not financial advice. Please reach out to your financial advisor for any financial decisions you make and do your own research. You should not be listening to me. I am just a guy on YouTube sharing my experiences. On top of that, do me a favor. If you haven't already, hit that subscribe button, smash the like button, make some comments in the comment section. It really helps YouTube's algorithm, and I can't tell you how much I appreciate that. It's been really cool watching the channel grow. Now, there are a lot of gloom and doomers out there, and those of you who've been watching the channel know I am not a gloom and doomer. At the same time, to be perfectly fair, the market has been overpriced for a long time, both the stock market and the real estate. Now, that does not change my general philosophy of my goal is to get people to invest and continue putting away. I made a comment in another video of I'd rather have 50% of whatever I'm putting away than 0% because the doom and gloomers scare me out. I also think you need to make a decision of what the goal of your investments are. If you're constantly, consistently dollar cost averaging, we're getting towards the end of the month, it may be a good time to add on to a position and not worry which way the market goes one way or another, especially if you have a long time horizon. I talk about having three different accounts. Like the set it and forget it account, I don't do anything. I plan to leave it there and hopefully never really touch it. So even if the market had another 20 or even 30% pullback, it's just noise and news and something for me to watch. Of course, nobody likes watching their portfolio drop in value, but the reality is that creates opportunity to be able to get in at better prices on something you plan to hold for a long time. On the flip side, the account that I use for trading, well, I've lightened up. I've made sure to have a decent amount of cash on the sidelines in case we get a real follow through. If we continue to the downside, I actually see two potential, things I could see happening with the economy. I could see a 10 or 15% pullback in pretty much all sorts of assets, whether that's stocks, real estates, collectibles, a lot of the things that shot up before, it still feels like there's a lot of fluff in them. And then I could see us just stagnate for a while. I see that as a legitimate possibility. I also think that sometimes when markets start going in the other direction, meaning down after a long up move, that once it gets to fair value, whatever fair value is, that starts creating a panic and actually pushes it too far the other way. The reason I want to make sure I have some cash on the sidelines is if there becomes real panic, where there becomes real buying opportunities in pretty much every market, whatever market it is that you watch, I want to be in the position to take advantage of the bargains. Now, if you work a steady job and you have consistent income, you can continue to just save and do what you normally do and put away the same ways you always do. But if your income goes up and down, or you worry you might be out of work or whatever it is, I would make sure to have something sitting around because it's possible we'll have some really good opportunity in the future. It's also possible we don't. Like, I never try to make any claim that it's going one way or it's going another. I try to react to the price action. One of my friends today said, I don't understand these analysts on TV. They say this, they say that. The reality is, I don't care who it is, they do not know the future. Just like me, they make the best guesses they can. Sometimes they're right, sometimes they're wrong. And if they're really straightforward about it, they'll adjust with the price action. I try to watch the price action more than the news around it. And unfortunately, as I've been watching this pullback play out, the volatility's died down a bit, and it feels like there's more selling pressure to come. I'm actually hoping that it pushes until the April 2nd deadline that Trump has for the tariffs, and whatever news we get, whether he's going to implement them, whether he extends longer, whatever the decision is, that we see some blow off volume and some push to the downside where the market can finally, wash out the people that are weak sellers and move on and start going higher. The same time, I'll keep an eye on things to see if we have a real slowdown coming, and if that means continued selling pressure. And does that start to spread out away from the equities market into the housing market? Now, when I was talking to the friend about it, I even said to him, we should have some things in mind and some prices where we'd actually want to buy things. And if it never gets there, great. Then that means the economy catches itself and it goes back up. But if there's a real correction, I don't want to be scared of it. I want to be excited to see the options that come along and what values we might find in whatever category of investments that is. It definitely bothers me how much we've come back and how we're already retesting the lows of the recent pullback, as well as how the markets behaved. It's hard to explain exactly what I'm talking about in terms of that, but it's just kind of this feel over time of, does it shoot up quickly? Does it come down slowly? Is it less volume? The market feels a little too orderly to me still. It doesn't feel panicked yet, which is why I have concerns that there could be more room to run to the downside. The question from there is, that just because of all the uncertainty out there, or is it systemic of something else going on where the slowdown is going to be a bigger problem than what we see coming? The same time, certain companies I'm super not worried about having the positions on, even if the prices go lower. This is where I try to weed out the things that I was just buying because I was hoping they would go higher versus the things that I think their earnings are solid, and that even if they slow down, if it's a dividend stock, that they've got plenty of room to be able to continue to make those dividend payments. And even if they slow down and earnings aren't quite as good, they're still doing just fine. One stock that I was looking at today that I mention every now and again, but I don't talk about it often, is like Archer Daniels Midland. I took a closer look. They're only using 50% of their free cash flow to be able to make those dividend payments. They're paying out over 4% return. That's pretty good. And that gives a lot of room for error or problems or slowdown to still be able to make the payments of that dividend. And if they're making that much money, even if the stock price goes down, when things turn around, they'll be in a good position. I think the reason that Archer Daniels Midland seems a little discounted to me is because of the problems they had about a year ago. And I think that caused it to go down further than it probably needed to, which is why I'm comfortable owning a company like that going into a position where it's possible we see a real slowdown, because I'm comfortable that they're going to have enough earnings to not go out of business and not have a major catastrophe. It's actually how I feel about Target, where it's priced right now, too. I see potential that they could slow down and earnings could get worse and all sorts of things, but not so bad that it's going to put them in jeopardy of going out of business. They still have a really low price to earnings ratio. Their cash flow, in terms of what they're able to pay out for their dividends, seems like it's got a lot of room for less income to be able to make those payments and still not need to cut the dividend or anything like that. So even if those stock prices drop, what I was talking with a friend of mine about recently was, I try not to pay attention to that for companies that I buy for dividend income. If I buy stock X, and I don't mean literally the one with the ticker symbol X, I'm just making up a stock today, and I'm looking at it and it's getting a 4% yield. I'm buying it in hopes of getting that 4% yield and in hopes that they're able to raise that dividend over time. I try not to worry so much about the price fluctuation of the stock. If the stock price drops, I don't sit there and do a reanalysis of how much I'm up or down on the stock. I just hope for what I originally did, which is I get that dividend payment. I still think of it as a 4% yield, even though technically on the new price of the stock, if the stock dropped, it's giving a higher yield. I still bought it where I bought it, and that is the yield I am thinking of for the dollar amount that I put into that stock. And vice versa, if the price goes higher. I don't sell it because now I'm looking at it and gee, it gives a lower yield. I don't make any changes in the decision unless I think there's something going on with the company where I have concerns that they're actually going to be in a worse situation. They may need to cut the dividend, and I see a different opportunity. Still different than buying a company like Amazon, where if I think it's fairly valued, I hope it goes up in price because they're not paying a dividend. Just different analysis. Both the same strategies, though, of deciding what I'm getting into it for today and sticking with those things. If it's a trade, it's a trade, and I can take a loss, which was where some of the cash that I have now is built up so that if there's a bigger correction, I'm in the right position. And then the stuff that's set it and forget it because I'm happy with those companies and will own it forever. Just remember that markets are markets. They go a lot further in both directions than people ever anticipate. I still think that the economy's fine and this will catch itself and we'll find ourselves at new highs in the next 6 months. I only say this in anticipation to be prepared for anything. We have had a long timeline of prices driving higher along with the inflation and stock prices going up and housing prices going up, where it wouldn't surprise me if we have a reversal where the opposite is true and you see a downside move that's actually bigger than people anticipate and may take longer and go further and everything else. Whatever it is that you're looking at, you just have to be prepared for both. And if we get that downside sell off where it goes further and longer than anticipated, see that as a really good opportunity. And if you just work a typical job and you have your income and you live below your means and you're continuing to put away every month, I wouldn't make any changes. At least me personally, again, not financial advice. As long as you know that your job is secure, your bills are paid, why would you make any changes because of the ups and downs of the markets? That's just gambling mentality and probably not the best decision to make unless you have a phenomenal view on this point. I'm actually hoping to see a real crash at this point, even though that sounds counterintuitive. I'm hoping we're not having a major recession and we're not having any real big problems and not much is changing in the economy. But I would like to see a nice big correction in the markets to create that opportunity to buy things really cheap. To be fair to the analysts who've been talking about it's been elevated in price for a while, it kind of has. I still hope in some ways that continues. But if it doesn't, that creates really good opportunity that things become a bargain as well. And you get an opportunity to buy things at cheap valuations. Now, it always looks scary at those times. So know that if that happens, the markets will look scary. But at the same time, that's a good time to be able to do things as long as your finances are in order and everything else. If it does what I would hope in some ways, I hope it happens with real estate and collectibles and cars and everything else. And then maybe we do see prices come down a bit and start seeing bargains in all sorts of places because there'll be a real suck out on money need from everywhere. Even things like gold that people call a safe haven. I don't know that I would see that as a safe haven. Maybe it will, but if there's a real drawdown, I would expect Bitcoin and gold and all of it to come down as well. I guess we'll see. It's a pretty exciting time. And in some ways, I almost think next week's the end of it. Like there's so much coming out next week, and there's been so much talk of this April 2nd tariff discussion from Trump. I think the worst that could happen is if they extended another month and put that nervousness in the air again. Now, there are possibilities that this is something to do with the commercial real estate loans, and I can go into that. Let me talk about that a little bit. There's a theory out there because the commercial real estate is kind of stuck in limbo. Right now, what's been going on is generally, those of you not familiar with commercial real estate, typically those loans get refinanced every 5 years. Well, if you remember about a year or two, they were talking about this impending commercial real estate downdraw that's going to really crush the economy because there's trillions of dollars in commercial real estate. They're going to have to refinance, and the ways that the loans work, they won't be able to. All of that is accurate. But what I've seen that's happened is the people I know who have commercial real estate have gone into the bank when it's time to refinance, and the bank wants them to put down more money, and they're not really in the position, so they say we can't. The bank says, well, because interest rates are higher and the rents haven't gone up as much, it doesn't qualify to be able to refinance. All of that's accurate. So the person's like, well, what am I supposed to do? And they're like, well, you have to put more money down. And they're like, I'm not putting more money down. The other thing to keep in mind with commercial real estate, it's what's called a non-recourse loan. So meaning you're not on the loan for a personal guarantee. If you default on the property, yes, you lose the property, but the bank can't really come after you for personal items unless you signed a different type of agreement, which isn't very typical for most of the people who do commercial real estate. So the people in there, they've probably taken out some money from the property as the prices went up because that's typically what they do. So they're not super stressed about losing the property. So this is the weird part. They get to the part where the person who owns the property says, fine, then you guys can take the property. And the bank goes, whoa, 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 we don't want your property because they don't want trillions of dollars of commercial real estate. They don't want a new problem with the commercial side like we had in 2008 with the residential. So now what? They don't really know what to do. So the bank essentially says at the end of the meeting, well, we don't want the keys. You're not going to put more money down. I'll tell you what, you just keep making the payment you've been making, even though technically we're out of the mortgage and we're not in compliance until we can come up with a solution. Well, if the current administration is able to press the Fed into cutting rates and where interest rates on the commercial loans actually come down to where all these commercial properties can be refinanced, then we might see a change and they'll start spending again and pushing everything else and stocks go back up. So if they need more time to pressure the Fed to start cutting rates so that the commercial properties can do their refinance and get back to things, we might see a little bit more of this uncertainty going forward to continue to cause pressure on both the markets and the Fed to fix the commercial real estate problem. My best guess is if that's the case and they're actually doing that and they put the pressure and the Feds cuts rates and the rates for the commercial loans come down to the point that they can do their refinances, that's when you'll start seeing some tax cuts and some spending and some rehiring from the government, as well as all the tariff information come to a head and finally have solutions and work themselves out. And then even probably more spending, which will regenerate the stock market and the equities and everything else, catch everything and right back up. Now, I don't know. That's just my guess and something that I could see that's possibly going on with the new administration and their discussions about rates and making houses more affordable. Keep in mind what they say and what the reality is are often two different things and not necessarily interrelated. Like they might be saying one thing to get the public on their side, even while doing something else. And I'm not saying they are. I have no skin in the game. I don't have a fan or not a fan of anybody in office. I watch it more because I'm curious what I think will happen with finances than anything else. Let me know your thoughts. Do you see that as a possibility? Do you guys just think I'm nuts with all of this? And what do you think is going to happen with the market? Uh, I guess we'll see going forward. Like I said, I've eased up on the trading account just to put myself in a position of if we have a real correction, I'd like to be in the right spot. And I don't know if we'll see one or not. Again, thumbs up, like, subscribe, make your comments, um, and watch everybody else you like to watch too. Have a great weekend.